How bad is it really? How much money has the Fed actually printed? How serious is inflation actually? Let's go over the real details in this video. This video will not be a waste of your time. I've spent a lot of time researching, and I want to break it down in a way that I haven't seen on YouTube yet. I want to basically go over all the real numbers and simplify it so people understand just how serious of a situation we are in with our currency. And I got to be honest, as I'm doing this research, and I'm sure you'll see in this video when I show all the charts and all the real information on this, it's hard not to get emotional. Once you see past the smoke and mirrors and you actually study the real numbers, you start realizing this is, in my personal opinion, disclaimer, theft. It could be argued that this is modern day theft. I'm going to go over all the details on the chart and all of that in a second here, and all these different, some really good information I have pulled up here on the left. If there's a video I made that's worth it to watch all the way through, I think this one will be it. But not only that, I hope that this video is worth sharing. I hope people see this information and they want to let their friends know and let the world know, really, just how serious this is. If it's worth your time, if you find it to be valuable, I'd appreciate that. I got nothing to sell you, so if you could hit the like button for the algorithm, share it. If you want to be a subscriber, would really appreciate you clicking that subscribe button. But other than that, I got nothing to sell you. So the first thing I want to talk about is what money is, at least my opinion of what money is. Money is stored labor. That's what I think of as money. Why were we on a gold standard? Why was it gold and silver in the past? Well, there was labor there. It took a lot of labor to find the gold, to mine the gold, refine the gold, and then you have that stored value. You have that stored labor. You know, grab the silver bar, for example. Pretty cool one. If you follow me on Instagram, you see better pictures of that. But somebody had to go into the Earth's crust, find that silver, mine that silver, refine it, put it into this form, and then now you know somebody's stored labor is here. Some company, some entity, some person worked hard, put this labor into this silver bar, and now I know that this was hard to get. Someone spent their time on it. But when you're able to just print the money, it is, in my personal opinion, theft, because you're not proving that labor. There is no stored value there. So what is money? Money is stored time. If you work, say you work, you're 9 to 5, and you put in your 40 hours a week. You put in, some people, 60, 70 hours a week. Then you multiply that out and you put in your, 240 hours, 300 hours a month into whatever job you do. Well, then you spend, you have 5,000, make 5,000, maybe make 6, 7, maybe make 10,000. Whatever you do, whatever you accept as your payment for your salary, for whatever you do, you are basically giving up your time for said money. And is that money changing by 8.5%? And that's if you trust this low inflation number that we're being told. I don't think so. If you're making, say, just to make round numbers, say you make $100,000 a year. A lot of people aren't. That's a lot of money. But say you make $100,000 a year. Well, if it's at 8.5%, is your boss coming to you and saying, inflation's pretty high, we're going to change it to, 108.5 on your salary now. We're going to give you $108,500 per year instead of what we used to give you. They're not going to do that. Bosses not only are they not going to do that, they can't even afford to do that. But let's go over some of the real information here. I'm sorry if it gets me a little bit riled up, a little emotional, but it's scary. And to me, when we deal with all that we have to deal with in building a business or whatever we're doing to try to participate in the economy of what's called capitalism, we have to deal with this, and we have to deal with central banks that are capable of absolutely manipulating the monetary supply. It's astounding to me. So let me show you just how serious this really is. So this is the numbers that a lot of people don't talk about. You'll hear people talking about it, but to break it down into a little bit more of a perspective, in 2020, it was $4 trillion in circulation. $4 trillion in circulation in 2020. January of 2020, around 4 trillion, 3.94 trillion. Fast forward just a little over 2 years, and we are at 20.6 trillion in circulation. Yeah. So what we hear a lot is people will say, yeah, we have 80% more dollars in circulation now, 80%. And the way you get that figure is what is 20% of, 20 trillion? It's 4 trillion. So that's 20% of where we're at now. And so you say, oh, well, there's 80% more dollars in circulation. I would flip those numbers around because that doesn't really, to me at least, maybe I'm just a simple individual. I'm a college dropout, not your everyday economist, but I'll tell you what, I would much rather people say there are 500% more dollars out there than there were 2 years ago. That is a more realistic number than to say there's 80% more dollars in circulation by taking this number up here at 20.6 and going, it used to be 4 trillion, which is 20% of where it is now, so it's up 80%. I don't like that. What I want to see more often, maybe I'm the first person saying this, and maybe, if I'm wrong, let me know in a comment down below. Let me know what you think. But I think more people should be saying it's up 5x. What's 4 trillion times 5? 20 trillion. It is up over 5x. So whatever amount of dollars that were in circulation, well, we know the dollars in circulation was around 4 trillion 2 years ago. Now it is 500% more. I wouldn't use this. There's 80% more. There's 80% of the dollars in circulation were printed in the last 2 years. Even though that number sounds crazy, what sounds even crazier and what really, drives it home is saying it's up 5x. There are 5x more dollars in circulation than there were in 2020. Now, maybe I'm the first person saying that, but I'd like that information to spread. And if you could help that, share this video, get this information out to some friends, would really appreciate it. Because I just want more people to know about this. Now, the scary part about it is this is the recent CPI information. This is actually from their website. It's up at 8.5% now. I mean, a year ago, they were talking about it being transitory, right? So it went from 2 point some odd percent. Actually, I think it was January of 2021, it was down at 1 point some odd percent. So if you go back a little bit further, they didn't include that, obviously. They made it March to March. But if you go back a little further, it's actually at 1.4 when they were calling it transitory. And now we're steadily up to 8.5% on the CPI. And that's their hand-picked CPI. The real CPI is somewhere around anywhere between 15 to 22%, I would say. Just my personal opinion, but a lot of others tend to agree. If you use the CPI back in the 70s, it would show that it's a lot higher than this one shows. Now, the thing that scares me the most is you have an 8.5% CPI, but the velocity of M2 is lower than ever before. So what is the velocity of M2 money stock? So M1 is the circulating money supply, how much dollars are out there in circulation. M2 is, velocity of M2 is basically how much are the dollars moving around. Are people putting their dollars under their bed, or are they actually going out and buying stuff with it? Well, the numbers show that people are holding their dollars. As this goes down, 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 it means people are scared and they're sitting on cash positions. So you have more people sitting on these cash positions. You have frivolous spending out there for just a lot of consumer goods. You have a stock market that's at very lofty levels, and nobody has really felt the pain. People enjoyed this extreme amount of money printing. If I knew what I know now back in 2020, I would have even been in the stock market, because the thing is, this didn't really hit home to me as much as it did to some others out there that took advantage of that. So people love to see this hit their balance sheet. So their stocks kept skyrocketing in value. So people think, oh, money printer go burr, Powell's making us all rich. But that game of musical chairs, as soon as it's not in the favor of the people that have enjoyed it and it starts going down, that's when things get bad really fast. Everybody's so happy in the stock market now, but when things hit the fan, it's a lot different. And so, again, I think the overall population has overlooked just how excessive this money printing is, just how diluted the dollar really has become, because they saw their real estate portfolio gain in value. They saw their stock market portfolio gain value. But as soon as you see that real purchasing power loss, in addition to a stock market decay, that's when it's going to hit home to the masses, I think, that this is a lot more serious than we thought. We enjoyed all of this gains, but we didn't realize just how bad it really was. And that's when things go in the opposite direction. So the total assets on hand of the Fed balance sheet, if you go back to 2020, since we were using this same time period here, was around 4 trillion, just a little bit over 4 trillion, right? Now they're up at 9 trillion. So how do you know, how is their balance sheet at 9 trillion, but the M1 is up at 20 trillion? Well, the reason for that is because of the stimulus. It's not just the Fed. The Fed was buying the mortgage-backed securities. They were buying all of these different things. But the stimulus is what got it to that over $20 trillion figure. And back in the day, you can go back on my channel, I talked about how bad the stimulus packages will be for the economy. And that was hard to do back then because people were suffering. And I kept trying to make these videos going against the stimulus packages. It wasn't easy at the time, but looking back on it, it's exactly what's happening. And here, basically, we're seeing in real time just how much money printing has been done. And it's up only 8.5%. You have 5x'd the monetary supply in the last 2 years. That is the term that I want to get out there. I haven't heard anybody say it like that. I hear 80% of the dollars have been printed in the last 2 years, or 80% in circulation are in the last 2 years. But no, this data clearly shows that the supply of dollars has 5x'd. So again, I hope this simplifies it for you. I hope it breaks it down in a way that you might not have seen on YouTube yet, because again, I'm just a simple individual. I just try to break down this information and simplify it so more people can digest it. And I hope it helps you. But really, are we supposed to believe that inflation is only going to be 8.5% and it's just going to fizzle out when you have increased the monetary supply that much? I mean, when we talk about, inflation's going at a rate that we haven't seen since the 80s, right? Since 81. 81 is back here. The dollar circulation, $1 trillion used to be a lot of money, everybody. $1 trillion was like, whoa, we're not going to get to $1 trillion. There's no way we're going to get that high. But look at the 80s here. So this is the Paul Volcker era when inflation was well over 15%. And they had to raise the inflation rate to over 20%, or they had to raise rates to over 20%. Let's go back to, and that's what caused the recession. So here's 81, and they had less than 500 billion in circulation. It just looks like a little ant on, it's a grain of sand on the beach back then. And this is how much money has printed in the last 2 years. And we're supposed to believe that inflation is only going to be 8.5%. They're going to somehow be able to stop this. No, Powell is sitting there with a squirt gun battling an inferno. That is what he is doing. He is sitting there with a squirt gun saying they're going to raise it 50 bips, which is 0.5%, which isn't going to stop an 8.5% inflation rate. All it's going to do is agitate it. I would argue he's got a squirt gun with gasoline. That's what I would argue. It's not even water in the squirt gun. They got an inferno of inflation, and they're sitting there with a squirt gun with gasoline in it. That's what I would say is going on here, because really you're just poking the bear. You're just agitating it at a 50-point basis hike. Let's call it what it really is, 0.5%. 0.5%. You got inflation at 8.5%. They're talking about raising it at 0.5%, another 0.25%, and that's going to stop it? No, it's just going to poke the bear and make it worse. So it's really like they've backed themselves into a corner, and there's really no way out, it seems, for the dollar. And so at this time too, it's not only all of this information, but let me go back. It's also that there is competition out there now. You had Powell recently go out there and talk about how there's room for another reserve currency. He used to never talk like that. That was unheard of for Powell to say something like that. And recently he talks about, there's room for another reserve currency. The truth is, there are other countries that are going to start looking at what's going on here and going, this isn't right. And do you blame them? Not only that, but when you look at weaponizing SWIFT, when you look at kicking people off of the monetary network, right? Now those countries are going to be looking for a different way to transact. Are you going to want to go back to dollars after it's been weaponized against you? Think about that. What are the effects of that? Whether you're for or against what they did, you have to understand that there are other countries that have to create a different system. And that's why Powell said there's room for another reserve currency. And that's why you're seeing the Saudis accepting yuan for their oil. And you're going to start seeing China and Russia getting paid in different currencies and accepting different things than the dollar, and reduction of the dollar on their balance sheet in their central banks. And do you blame them? If you trusted a monetary network to be the reserve currency and that said monetary network kicked you off, what are you going to do? So all of this is going on, which would already be very scary if there wasn't that. But in addition to increasing the monetary supply by 5x in 2 years, we have other countries that are looking for different ways to transact outside of the dollar. It gets me riled up because it's like I've almost feel like I've learned more than I should. I kind of miss my life when I didn't know as much about all of this, because it gets you. It's troubling. It's really troubling because people don't understand that this is theft of time. This isn't just, we all look at the figures. Oh, well, inflation's bad. That means our groceries are going to cost more money. Our gas is going to cost more money. I would take it further and say, no, the population's time is being stolen from them. They are willing to work, to put in their labor, to trust this note, to trust this bill and go, okay, I trust that this currency is going to hold value. And what has it done? Lose 99% of its purchasing power since the inception of the Fed. That's what's happened. And so I argue that time is being stolen. It's not just looking at it on the surface. It's looking past that and going, okay, it's not right. It's not right. And I don't think people's wages are increasing at the same rate. I mean, when you really break it down, if you've increased the dollars in circulation by 5x, you think inflation's really going to stay at 8.5%? Better yet, are the employers going to be able to afford to pay their employees more money to compensate? I would argue, my personal opinion is inflation is over 20%. We're being told 8.5. I would argue it's over 20%. If I'm correct, which again is just my opinion, are employers that are paying, 50 grand going to be able to pay 50 grand a year on a salary? Are they going to start paying 60, 65 to compensate for this inflation? And are they going to continue to do that as it compounds? I doubt it. So time is being stolen and things are costing more money at the same time that people are working the same amount of hours for dollars that have been diluted. That is not what you want to see. And at the end of the day, what it tells me, and I'll end the video on this. I know I've gone on a little bit of a rant, but I hope it was worth your time. If it was, again, please share it. I know I say that a lot. I know that most people won't do it, but if you find value in this and if you think more people need to know about this, get this information out. Share it. And if you hit the like button, it helps with the algorithm to get it out there, regardless of how much it doesn't want to show this kind of content. If you hit the like button, it gets it out there one way or another. But I wanted to basically just end the video on talking about how serious it really is when your time has been taken from you, and worse, most people don't know it yet. And the last thing I want to say is humans shouldn't be in control of a monetary system. Worse, one entity of humans should not be in control of a monetary system that can be inflated like this, because that inspires corruption. That's the truth. There is no way that eventually it doesn't inspire corruption, because if you have that kind of power at your fingertips to kick the can down the road and not take responsibility for the actions of excessive money printing like this, you're going to choose to kick the can down the road further. But what's so scary about this is one currency has been trusted with all of humanity to run their economies on it, and they take advantage of that. And it's not okay. It's not okay. So it's scary, because I hope in the future we go back to a standard where there's proof of the work. This silver bar is proof of work. Somebody worked hard to mine that silver bar. You have a gold bar. Someone worked hard to mine and refine that gold bar. With Bitcoin, somebody worked hard to build the computing systems to mine, and they paid the electricity bill and all these different things, and they have proof of work stored there. That's what we need to go back to, and that's a system that humans don't have ultimate control to just inject at will. They have to actually put in the work. They have to actually put in the time, the labor. So that's the video. Thank you so much for watching. I will see you at the next one. Hopefully it was worth subscribing. Please do click that red subscribe and the like button. Really do appreciate that. See you at the next video. Signing out.